What if I told you that when SpaceX finally goes public, millions of people could end up buying the stock, whether they want to or not? And if current estimates are even close to reality, SpaceX could become the largest IPO in financial history, a company worth nearly $1.75 trillion. But the most surprising part isn't the valuation. It's who might be paying for it. To understand why this matters, we first need to understand the scale. At $1.75 trillion, SpaceX would be worth more than many of America's largest aerospace, industrial, and defense companies combined. This isn't just another technology company. This would be one of the most valuable businesses ever listed on a public stock exchange. And that's because SpaceX today is no longer just a rocket company. Most people think of rocket launches, Falcon 9 missions, astronauts, and ambitious plans for Mars. But beneath the surface, SpaceX has quietly evolved into something much bigger. Today, it's really three businesses under one roof: a launch business, a global satellite internet network, and an expanding ecosystem connected to artificial intelligence. Three engines of growth, all operating at the same time. The most important piece of that puzzle may be Starlink. Thousands of satellites now circle the Earth, delivering internet access to rural communities, ships at sea, commercial aircraft, emergency responders, and even military operations. What began as a side project has rapidly become one of the fastest-growing communications networks in history. And for many investors, Starlink alone may justify a substantial portion of SpaceX's valuation. Supporters of the company see a future filled with opportunity, not just rockets, but global internet infrastructure, government contracts, space transportation, satellite services, and potentially artificial intelligence applications. From that perspective, buying SpaceX isn't simply investing in a company. It's investing in multiple industries, all at once. And that's exactly why some investors believe the valuation could continue climbing even higher. But every investment has two sides, and critics argue that valuations this large come with enormous expectations. Future growth must continue. Competition must remain limited. Technology must keep advancing, and regulators must cooperate. Because when investors pay for perfection, even a great company can disappoint them. History is filled with businesses that looked unstoppable until reality failed to match expectations. Now we arrive at the most controversial part of the story, a trend that has quietly transformed modern investing: passive index funds. Today, trillions of dollars flow into funds that simply track stock market indexes. These funds don't pick winners. They don't analyze earnings reports. And they don't make emotional decisions. They simply follow the index. Whatever enters the index gets purchased automatically. That means if a company becomes large enough and eventually joins major indexes, millions of retirement accounts, pension funds, and index funds may begin purchasing shares automatically. Not because investors researched the company, not because they voted for it, but because the rules of passive investing require it. That's why some analysts argue that future investors could provide massive demand for a company like SpaceX the moment it enters major benchmarks. Of course, none of this guarantees success. and it certainly doesn't guarantee profits. Markets have a habit of surprising everyone. Some companies looked expensive before becoming legendary investments. Others appeared unstoppable before collapsing under their own expectations. So perhaps the most important question isn't whether SpaceX is an extraordinary company. It very well may be. The real question is whether the price investors eventually pay will already assume that extraordinary future. Subscribe to Quantara Finance for more such informative videos.